Welcome to The Explainer. Today, we're going to cut through all the noise and really get to the heart of a major risk that's kind of lurking behind the daily market swings. We're talking about the connection between the conflict in Iran, those soaring energy prices, and the very real threat all of this poses to your portfolio.
So let's just dive right in. The famed economist Nouriel Roubini, you might know him as Dr. Doom for his often gloomy but spookily accurate predictions, he's sounding a pretty loud alarm bell. He's warning about a potentially ugly economic scenario. So what exactly has him so worried?
He's talking about one word: stagflation. And it's this really dreaded economic trap, It's where the economy just grinds to a halt, it stops growing, but at the same time, the prices you pay for literally everything just keep on climbing. It is the absolute worst of both worlds, so it's really crucial that we understand what could actually set this off.
So, what's the trigger? What could actually push us into this kind of stagflationary environment? Well, the number one risk factor right now is the ongoing conflict involving Iran and its huge potential to disrupt the entire global energy supply. Okay, take a look at this number right here. This is the current price of Brent crude oil, and that's a massive benchmark for the global economy. I mean, this is the price that ends up dictating what we all pay at the pump, what we pay for airline tickets, and even for the goods sitting on the shelves at the store. And this slide, wow, this really drives home the impact, doesn't it? We're talking about a staggering 47% increase since the conflict really escalated. And look, when energy prices spike like this, it sends ripples through the entire economy. It pushes up the cost of everything from transportation to manufacturing. This is the inflation part of stagflation, happening in real time. Now, even though we're hearing a lot of talk about a ceasefire, a quick and easy resolution is, well, it's far from guaranteed. The demands that are on the table are pretty significant, making this whole thing a very complex geopolitical chess match. So what's holding up a potential deal? Well, Iran has laid out 5 huge demands for what they're calling a complete end of war. And these go way beyond just a simple ceasefire. We're talking about things like closing U.S. bases in the region and getting international recognition for their control over the Strait of Hormuz, which, by the way, is a vital choke point for global oil. These are massive geopolitical shifts, and that makes a quick resolution pretty unlikely. All of this geopolitical uncertainty is creating this kind of whiplash effect in the financial markets. I mean, investors are being pulled in 2 totally different directions at once, and it's leading to some really mixed, very confusing signals.
So on one side, you've got hope. The minute we hear news about ceasefire talks, the big stock indices like the S&P 500 and the Nasdaq pop higher. And the VIX, which is basically the market's Veer gauge, it drops. But then, on the other side, you have the stark, cold reality of weakening economic data. For instance, the US PMI, a key indicator for manufacturing health, just hit an 11-month low. That points directly to a potential economic slowdown. The stagnation part of stagflation.
So what this really tells us is that while investors are hopeful, they're not fully convinced. Not by a long shot. They're reacting positively to the headlines, sure, but they're being held back by this weak economic data and some key technical barriers, like the S&P 500 struggling to break above its 200-day moving average. That's a big long-term trend indicator. Basically, the market is in show-me mode. It wants proof. And this table really puts it all into perspective. The risk of those talks just collapsing, it's rated medium to high, with a maximum potential impact on the markets. And that stagflation scenario we keep talking about, the one triggered by super high oil prices, yeah, that's right behind it, with a medium probability but a large potential impact on the whole economy. All right, so the big question, what does all of this mean for you and your investments? Let's try to distill this whole complicated situation down into a clear, strategic takeaway for navigating all this uncertainty. Right now, the core investment thesis is really one of balance. Don't get carried away chasing these positive headlines, because honestly, they might just disappear tomorrow. But at the same time, don't panic and sell everything based on the risks alone. It's really all about being prepared, not paranoid. So how do you actually put that into practice? Well, here's a simple 4-step action plan. First, and this is the most important, don't make any drastic changes to your core long-term investments just based on some short-term news. Second, it's probably wise to maintain some kind of hedge against inflation from high energy prices, maybe through something like an energy ETF. Third, you've got to be aware that certain sectors like defense or cybersecurity stocks, think Palantir, can actually benefit from all this geopolitical uncertainty. And finally, be really wary of what they call beat and drop stocks.
Companies like Micron that report great news but their stock price falls anyway, that's often a sign of some underlying weakness and fear in the market. So, looking ahead, here are 3 key things you should really keep an eye on. First, any official word from Iran about those ceasefire talks. That's huge. Second, the upcoming PCE deflator report. That's the Federal Reserve's favorite way to measure inflation. And third, the VIX. If you see that fear index drop below the 20 level, that would be a very strong signal that market anxiety is genuinely starting to calm down. So ultimately, this brings us to the crucial question for every single investor right now. In a market that's being pulled between hope and reality, which narrative do you trust? Are you listening to the optimistic headlines, or are you paying attention to the underlying economic data? That's the key decision you have to make in this environment. Thanks for joining this explainer.